I'm just going to quickly, briefly show you the free application. So that's what it looks like. Okay, it looks almost exactly identical to the main application. It's just some of the stuff's locked down. Okay, that's the main difference. The best place to start is in the digital library. You've got almost 5 hours of education there. So topics ranging from, what is volume, very basic sort of stuff, to future spread rolling, CTAs, all that kind of stuff. So it does get quite simple, but also quite advanced. There's also a trading analysis course there available for you that you can go through. And then there's also some SRM Lite tutorials just to kind of enlighten you on certain topics. So the education there's 5 hours of education, all free. You can unlock it, watch it at your own speed. The main tool is the risk manager. Okay, very, very simply, you're going to add your markets, and then, you can just go add trade. So I'm just going to add a trade. Let's, for example, do a trade in the mini S&P long. Okay, excuse the strategy. I wouldn't call it strategy long, but let's say we want to do a breakout and we have a 10 handle stop in the S&P. We simply put in our stop size, push enter, and straight away it tells us 4 lots. Okay, all automatically managed in terms of risk. If I put that trade live, okay, I go buy 4 lots, you'll see my available risk drops off. I've allocated $400 to the market. If I then exit the trade, okay, and I just go and tell the system I lost $100 in the trade, okay, everything just automatically updates, right? It's an automatic risk system. You don't have to think, okay? You just simply go, click, I'm going to use a 60-tick stop this time. You click and it says 2 lots. You don't think, okay? There is no need to think. You then go tell the system, fine, I sold 2 lots, and everything updates in real time. That's the point of it. If I then do multiple trades at the same time, the system is automatically working out, okay, this trader's got 2 trades on already. Now he wants to do a 3rd trade. We need to understand that that's adding the risk on. He's adding more and more leverage. Okay, so it's all working it out in the back end. You don't have to think, and that's the key. That's how you get rid of emotion in your trading. That's how you get rid of biases. Let a system take care of it for you. You don't have to do it yourself. You don't have to struggle. You don't have to panic. You don't have to be emotional. Okay, that's what traders did 10, 20 years ago before technology was invented. As traders now, we've got automatic risk management, that we can use. Okay, and it's all free. This entire application is free for you. Okay, so that's how you use it. In terms of what else is available in the application, the data visualization is pretty cool. Obviously, there's only 1 or 2 charts here. The profit and loss dispersion is really insightful. Okay, this is a very, very important chart to look at, because this will show you one of your biases, okay? Which is, what it shows you is how much you typically allocate. So this yellow line is saying to me as a trader, I typically allocate $200 to my trades, right? And on average, I'm making 0 as P&L, right? So straight away you can see, well, I'm willing to risk $200 on my trade, but I only make 0 on my trades. You could see that mismatch, that inability to make one-to-one risk reward. Okay, so it very, very clearly highlights when there is a lack of edge as a trader. Okay, obviously keep in mind that this system has got very few trades on, so the data might be a bit misleading, but there you get an idea of it. And it also then shows you your buckets. Okay, so it shows you your daily and profit and loss. What sort of bucket category does it fall in? Okay, often what I see with young traders is they're willing to risk $200 in a day, but so infrequently do they ever make $200 a day or more. Okay, so what happens is they'll have the yellow line on the right side and all of their daily distribution will be to the left. And that straight away says to me, this trader is incapable of sitting in trades. They're incapable of paying themselves a sufficient amount to survive at this. Okay, but the key part here, and this is important, you're not expected to make money on day one. Don't expect yourself to make money on day one. Don't put that pressure on yourself, because it's just not going to work that way. Right? From day one, you need to accept that you're learning. Okay, and what will happen over time is, sure, your yellow line's going to be to the right and your purple line's going to be to the left. But steadily over time, what will happen is that yellow line starts to move to the left as you become better as a trader. Okay, that's the key, and it comes from consistency, right? What typically happens, traders don't survive for long enough. They come in, they go, well, you know what? I think I know what I'm doing. I have my $5,000 account. I'm just going to risk $1,000 on a trade. They end up blowing up before they even learn a thing about trading. Okay, the key to this game, number 1, advice above all advice, you can go write this on YouTube, is survive. Okay, survive for long enough to figure out this game. If you can do that, you've got a shot. If you can't do that, if you can't survive, the reality is you would never know whether or not you would have made it as a trader. Okay, that's unfortunately the harsh reality. One final thing I really like inside this application is this tool on the right, or this statistic called controlled losses. Okay, not many people talk about controlled losses. It was something that I definitely focused on a lot early in my career. And how you have to think about controlled losses is it's a loss you could have avoided if you had done the right thing. Okay, so the way to think of this is, if you should have traded 5 lots, but you traded 7 lots, right? What happens is there's an opportunity cost there, or there's an opportunity loss there. And that gets calculated over time. And what you start to see is, if I just follow the rules, if I just do as I'm told, and I can just stick to a plan, the reality is my control losses will be 0. And what you'll start to see over time is that when you misbehave, when you don't follow the plan, these control losses add up. They always add up. When you stick to the plan, you become consistent, you make money, right? It goes without saying, do the things that are in your best interest. Be disciplined enough just to listen, and it's not difficult, okay? Like I said, you click on the risk manager, you go and add a trade, you say, I'm going to trade the S&P 500, this is my trade strategy, I'm going to use a, I don't know, 75 tick stop, you push enter, it says 2 lots, you simply go onto your platform, you click 2 lots, 2 micros, whatever it might be, you click buy. It's as simple as that. You put your stop at 75 tick. If you just do that, you will develop consistency. You'll develop objective understanding. You'll develop all the skills necessary to become a trader. You'll develop it at your own time as well. But you are guaranteed you are not going to rinse your entire account. You cannot blow up your account if you follow the risk manager. That's the point of risk. It's there to protect you so you can learn and figure out the game of trading.